Hey, what's up, my friend? Welcome back to this week's market analysis, right? But before we get started, I want to say one thing, right? Is that, we have crossed 20,000 subscribers on YouTube, right? And I would say, a big thank you, alright? I can still, vividly recall, right, when I first started, sharing videos on YouTube, right? I had my first subscriber and I think, wow, there's, actually someone out there in the world, wanting to hear more from me, right? Then I had my first 10 subscribers, the first 100, and up to now, right, 20,000 subscribers. I'm just, honored. I am privileged, right, to have you on this journey with me. So from the bottom of my heart, right, I want to say thank you for, being with me, all this while, right, and, showing your support. I really, really appreciate it, and we are now 20,000 strong. All right, and definitely, right, along the way, I've learned that, you can't please everyone, right? There will be people who, would, dislike what you do, who are so-called, haters, troll, etc., dislike your stuff and videos, and I've just one thing for you, right? If you happen to be, a hater, right? Eat this, right? And yep, that's about it, right? Eat that. So with that, right, let's move on into this week's market analysis, right? This week focus will be on swing trading, right? I will share with you a couple of trading setups that I took this week, right? And also, to share with you, right, there's a potential setup that I'm looking at on this currency market that I really like, right? It has the trend, it is trading from an area of value, right? And all that I'm waiting is an entry trigger. So I'll share with you, what market this is. All this and more in today's video. I'll see you there. Okay, so before I begin today's market analysis, right, I always have, questions from traders. Hey, Rainer, how do you trade the markets? Do you have, any materials that I can start off, to read, to learn? So what I suggest always is to go down to my website, tradingwithrainer.com, right? Just pause this screen, key in this URL, and you'll come to this page. Okay, then as you scroll down, right, so let's say you want to learn more about price action trading, about swing trading, I would recommend downloading this ultimate guide to price action trading, because this would get you covered with all the essentials, right, from the basics to the advanced stuff on how to be a better price action trader. And for those of you who are interested in trend following, right, how to write big trends in the market, right, so you can grow your wealth steadily over time, this would be for you, right, the ultimate guide to trend following. And just click on this button, enter your email, and I will send the guide to your email address, right? So if you're interested in both, then you can feel free to download both of them. Okay, so this is where I would always recommend traders to start with, right? Go to my website, tradingwithrainer.com, and go and download these two trading guides. I will share with you the trading strategies I use, practical techniques and tips that you can implement, right? And get trading results. So moving on, back to this week's weekly analysis, I just want to first and foremost, right, share with you a couple of swing trades that I took this week, right? I want to share with you the thought process behind it, why I enter, why I exit, and stuff like that. So first and foremost is the dollar yen trade, right? I was short this market. If you see, right, price at this, let me scroll a little back, right? So at this point, it was actually below the 200 period moving average, which is this black line over here. So you can see that there was actually, a level, right? Let me change this to black. Or how about pink, right? Let's be a little funky today. Pink, magenta, whatever you call it. So there's this level over here, previous support, right? And when it breaks, becomes resistance. So at this point over here, right, I was looking at this chart and I saw that, this market, right, is retesting this previous, gosh, this is quite irritating. Okay, so let me use a different tool so the line doesn't get in the way. Over here, this one over here, right? Previous support and resistance. At this point, I was interested to look for a short trade towards the downside, right? First and foremost, price is below the 200 period moving average, right? And if you look at it, right, you have basically a strong trending move lower, and this is possibly just a retracement, and then another move lower over here. So this is my thought process, and I went down to the 1 hour time frame to look for an entry trigger. So back to the 1 hour time frame, it is something like this at this point in time. Okay, So the market, right, this is the daily time frame line level you saw earlier, right? And at this point, the 1 hour time frame show me this pattern. This is a descending triangle pattern. I like to trade this pattern because it's telling you that the bulls, right, are getting weaker, because as the sellers, the bears come in, they push price lower over here. Then you have another lower high over here, right? So you can see this is why you got this downward trend line. Right, it's telling you that the sellers are coming in to push price lower, and needless to say, right, the buyers are the one that is losing ground. And on top of it, right, if you look at it based on this swing of the market, right, this is quite interesting because previously the bulls were in control, right? A strong trending move, a strong trending move, a strong trending move, and the final trending move before the sellers come in and push price all the way lower. And, you know, erasing the gains of this last final move, right? And on top of it, if you notice the strength of the sellers, right, notice the huge bodied candles that seems to be getting larger and larger. Okay, so this was the first thing I saw. Second thing I saw is that I wanted the buyers to show weakness, and the weakness came in the form of this descending triangle. They couldn't push price higher, you know, couldn't even retest these highs over here. If you compare it to the previous attempt, right, the bulls have no trouble pushing back to the previous high, pushing back to the previous high, right? Whereas this one over here is telling you that they are getting weak. Okay, so this to me is a sign of weakness by the buyers, and I want to be short. On top of it, I have my buyers from the daily time frame. So what I did was that I placed a sell stop order below this low. My stop loss is 1 ATR above this high. It's, I think, somewhere here. Right, so this is my entry. This is my stop loss. So this is a swing trade for me. So I had the first target somewhere here. This was my first target. Right, let's give it a tick. So I had no trouble hitting the first target. Okay, so the subsequent half of my position size, I was actually trailing using the daily time frame, using the daily highs. So if you look at the daily time frame, go back to the daily time frame. Okay, say somewhere here, right, I got triggered in the trade, went in my favor, and I was trailing above this previous day high, right, which is this high over here, right? So I was actually, you know, if the market were to close above the previous day high, I would exit the trade. So for in this instance, right, basically blast through my level and close at a much unfavorable level for me. So that was a full 1R on the second half of the position. The first half of the position, I had hit my target. So overall, this was actually a loss of minus 0.3R on this trade. Okay, so this is for the dollar yen. This is from a swing trading side of things, not trend following. So don't get confused, right? I'm basically both a swing trader and a trend follower. So I adopt different trade management for two different types of trading methodology. So I'm just, in today's video, is focusing on just swing trading, right? To keep things simple and straightforward. All right, so for this swing trade, right, it's a loss for me. So moving on, right, there was another swing trade that I took. Let me get rid of this line. Remove. Okay, it was New Zealand yen. Again, very similar thought process, right? Let me just walk you through it, right? So New Zealand yen at this point in time, right, I was actually bullish at this juncture over here. Okay, price is above the 200 period moving average. You can see over here, and it's hovering at resistance. So for those of you who have been watching my videos, right, regularly, you know that there was a similar setup on the Treasury bond where I said that it's also hovering at resistance, and I said that this is a sign of strength for the buyers, right? Because if you think about this, if this level of resistance is strong, right, it should come in quickly and get rejected fast. It shouldn't come into a resistance level and start hovering over here. This is a sign of weakness for the sellers because they couldn't push price lower. In fact, this is a bullish sign because it tells you that there are people willing to buy at this level. In front of resistance, they are willing to bid in front of resistance. This is a sign of strength from the buyers because they are willing to buy at this higher prices. Okay, go and pay attention to all your charts, right? Look what happens, right, when price is hovering at support resistance. How many times does it lead to a breakdown or a breakout, right? Go and, look through your charts historically and just, journal it down, write it down, collect the stats, and you will see what I mean. Okay, so this over here, I was already bullish as price was hovering at this area of resistance. This is what I call a build-up. So I was looking at entry, right, in this build-up area, but I couldn't get an entry. There was no a trigger for me to go long. So where the trigger came, right, was on the 4-hour time frame where I basically had a break and retest. So basically, this was the build-up you saw on the daily time frame. In fact, it's somewhat of a ascending triangle, right? Higher lows coming into resistance. Then price broke out of it. Retest. This was where I found my opportunity to get long. Okay, again, nothing fanciful. The setup is pretty much simple, alright? The key to understanding your trading setup is to know where you are in the big picture, where you are in the context of the market. That is much more important than just the trading setup itself. So anyway, the setup is very straightforward, right? Price came down lower, retested this previous low, and then it closed higher over here. To me, this is a form of price rejection, right? It's a form of a false breakout because traders who went short on the break of this low clearly are in the red, right? If you short this low of this candle, right, and the price rally against you, obviously you are going to suffer a drawdown, right? Your account will be in the red, right? You'll be having a negative P&L running. So I went long on this. Stop loss, pretty straightforward, was 1 ATR below this low, so it's somewhere, I believe, here. Okay, entry is somewhere here. Okay, so this is a swing trade again. So I took my first target at this high over here. I did not aim for the absolute high. Why is that? Because it's simple, right? You have to understand that support resistance or swing high, swing lows on your chart are pretty much an area. Alright, there are times where sometimes it may not retest the exact high, whereby it just comes up here and then it trades lower from there. So if you put your stop loss at the exact high or above that high, there's a very good chance that you may not get filled. Alright, so you want to be conservative when you are setting your targets, right? Set it at a level that there is a higher probability of getting filled. So for me, I set it, somewhere here, just below the absolute swing high. Okay, so I had my first target met, and after which you can see that it came back all the way back to my entry, and then it rallied back from there. So I wasn't stopped out on the second half of the position because, as I've said, right, I was trailing, right, using the previous day high. So if you look at the daily chart, it's very simple. So I was using a close only basis. So this was a spike that came all the way down, but it did not close below this low. So I'm still in the trade. In fact, the second half of the position, the stop loss was at its original level. So I'm just trailing my stops, right, based on the previous day low. So it's at this point over here, it will be at this low. So if the candle closes below this low, this previous day low, I would exit the trade. So this is for swing trading. I'm just interested in capturing one swing on the daily chart. That's it. I'm not interested to swallow or endure the retracement on this daily chart time frame because that is more of position trading, that is more of trend following than swing trading. So I hope this kind of gives you an idea into what my swing trading is like. Again, the setup are very simple. It's just placing a sell stop order, waiting for a false break setup. Very common sense stuff, right? Nothing too fancy. But I would say the important part that I want you to take away is to understand the context of the market, right? The structure of the higher time frame. That is important. All right. So moving on, right? Let's have a look at a potential setup that I'm looking at. Okay, Euro Aussie. Again, right? Let's go back to basics, fundamental stuff that I've been talking about for months and over the years, right? Because this stuff works, right? If not, I wouldn't be repeating them for for this long period of time. So again, Euro Aussie. This is the 200 period moving average. Price is above it. So what should you do? Well, you should be long, right? This, if you have been, understanding the works of my own trading, you should be long, right? So next question, right? Number one, we have the trend. Trend is up. Second thing I look for, the area of value, right? You want to buy from an area of value, or you want to trade from an area of value, right? So is there an area of value at this point in time? Well, there is, right? You notice that this is the previous resistance, turn support, and right now price is at this area of value, is at this area of support. So you have one, you have two. The third thing you're looking for, what is an entry trigger? Meaning, what is the price pattern that you're looking for to confirm your bias, where the market tells you that it's ready to move according to your bias. So that's the third thing you're looking for, an entry trigger. So let me share with you a couple of entry trigger that you can look at, right? First and foremost, right now price has traded below this low. So traders who are short are clearly, right, pretty much at break even right now, or maybe just slightly in the red. So the first thing that you can look for is for this market to rally higher, all the way higher, and close bullishly. These traders who are short, right, are now trapped because the market has traded against them. So you can profit from their so-called misery or their losses by going long. Again, stop loss can be 1 ATR just below this low. That's one. Alternatively, if you want to trade you want to get a tighter stop loss, you can go down to the 1 hour time frame and look at this, right? On the 1 hour time frame, this market is pretty much, I would say, still in a downtrend. So it's too early to go long at this point in time. All right, in fact, this is actually a valid trading setup. If you are aggressive enough as a trader, you can actually trade this false break of these lows. Right? You're not actually trading off these lows over here, because if you realize you're trading and leaning against the higher time frame structure, which is this area of support over here. So there's like so-called two areas of support, the lower time frame and the higher time frame, and this was a valid entry trigger to go long. But this is more for aggressive traders, because this is really a much more riskier trade, right? For those who are more the kind of traders who wants to wait for more confirmation in that sense, right? What you can do is you can draw out this range, right? You can see that the market is in this range over here, between this support and resistance. So you can, two things, right? You can wait for the market to come above here, form a build up, and then you trade the breakout. That is one. Alternatively, you can wait for the market to break out of the range, perhaps form a bullish flag, and then continue trading higher, and you get long on the break of these highs. So there are a couple of ways to actually trade this potential setup, right? I believe I covered this in the recent webinar we had with Kim Ixian, right? This is so-called a potential accumulation stage, and this is one of the entry techniques that you can use to enter the trade, right? So this is I would say a few things I'm looking at as I'm trading the Euro Aussie. Okay, you want to have a couple of toolkit or toolbox in your arsenal, so that if the market were to act out the way you anticipated, right, you can actually take the trade. So this pretty much boils down to what I would say: trade what you see, not what you think. All right, so let the market show you what it wants to do, and then you put on the trade. If the market does not conform to your bias, for example, at this point in time, you know that you have the trend with you. Number two is at an area of value. But the third thing that is lacking is the entry trigger. Okay, that has not happened yet. Right, so some traders are comfortable without having an entry trigger, whereas for me, I prefer to have an entry trigger. So I'm waiting for the market to give me a valid entry trigger. So I'm trading what I see, not what I think. I don't think that this level is going to hold, so I go long. No, right? I want to see that the market is showing me signs of holding at this level. Only then I would go long. That is my style, that is my preference. So this is what I mean by trade what you see and not what you think. Alright, you don't want to think, I think it's going higher, I think it's going lower, blah, blah, blah. No, don't think. See the price action and then trade the price action. Manage your risk, entry, and everything based on the price action you see. Okay, so yeah, running a little long for today's video. So just a quick recap, right? Today's video I shared with you a couple of trades, the dollar yen and the New Zealand yen trade. And last but not least, I am bullish on the Euro Aussie and waiting for a valid entry trigger to go long. Alright, so this is what we have covered in this week's market analysis. If you have enjoyed this video, please hit the subscribe button below, right? And it's a way of telling me that hey, you're enjoying this video. It's a good feedback, and I can produce this type of videos aligned with this type of themes. And one last thing, right? You can always go down to my website, tradingwithrainer.com. Alright, this is the link, and download these two trading guides. So with that, right, I have come to the end of this week's market analysis. Alright, I hope things are well on your side. With that, I'll talk to you soon.